That's also interesting. How big an impact have things, regulatory and other directives such as MiFID, had an impact on the growing demand from the end user space, the hedge funds, the asset managers?
Well, this is about best practice. In FX, MiFID really hasn't had that much of an impact, except in the real money area. And as we mentioned, that's an area which needs to have a considerable amount of work undertaken. Something that we're certainly, I'm hoping, at the forefront of doing. We've got a couple of initiatives this year to address the real money space. Elsewhere, the issue is not really about regulations as such. The foreign exchange market isn't a heavily regulated market. It works essentially under a set of rules which can be described as best practice, which are published by the Bank of England and the Federal Reserve. And both of those two bodies stress the importance of being able to, one, get a ticket into a position-keeping system as soon as possible, and secondly, to avoid, where possible, traders entering tickets themselves. And there are a number of reasons for this. The first is that it's really a very expensive way of being able to capture data to have someone who's paid potentially several $1,000s, hundreds of thousands of dollars a year, entering a ticket. Secondly, when they do it, they can make errors, and it costs a lot of money. Several banks have quoted a figure of $500 minimum just to fix a broken trade. And finally, it's unfortunate to say, but most trading frauds are undertaken because a trader was able to enter the ticket in the first place. So there's a strong pressure, not regulatory pressure, but pressure from the central banks to have automated delivery of tickets rather than manual entry of tickets, and that's good. Similarly, what we're seeing is the need, again, to some extent forced on by the market, but also by the central banks, to look at ways of being able to compress these tickets, to be able to reduce the load on the back offices. There are a number of risks which currently exist within the over-the-counter markets. The obvious one is credit risk in the FX market. That has largely been dealt with by CLS, and when Lehman's went under, CLS performed a stunning job. But perhaps what's less well known is that a year before Lehman's went bust, there was a considerable problem over a weekend in August, where the number of tickets basically deluged the back office systems. And if it hadn't been for the fact that there was a weekend that allowed the back offices to catch up, then people would have failed to deliver the money on the prescribed value date of the trade. And that's quite serious for a large number of institutions, because most of this is actually based upon, most of this trading is based upon cash flows. Either you're basing your decisions upon your expected cash flows, or indeed you have a set of further decisions which are going to be made because of the currency cash flows. And if someone misses a value date because a trade is broken or because the systems can't keep up, then you've got what actually can be quite a significant operational risk which kind of dominoes through the system.
Another element we'd like to cover is, given again that this seems like something that both banks and their customers should be actively doing because it is more efficient, it's more cost efficient, it's more operationally efficient, how is it then that a small company such as Logiscope, which is obviously a specialist, is focused on this when the banks themselves don't seem to be developing their own? What's the rationale when banks are making a decision between building their own or buying in expertise?
Well, I'm really glad you asked me that question. So, just a little bit of background on Logiscope and its history, because that really does define why we happen to be in this market. So, through the first part of this decade, we built the global deal notification system for EBS, world's largest electronic brokers, now known as ICAPs, although I find it personally very difficult to change. Having done that, we basically felt that this was a service which, since clients of EBS expected to have, should actually be expected to be provided by single bank portals and other multi-bank brokers and portals. So we set about rebuilding the software to be able to deal with two specific demands that we felt we hadn't addressed in the version that we had originally built for EBS. So the first was that it is very difficult to integrate anything in a bank, and therefore the easier it is to integrate a product, then frankly, the more volume one is going to get. So we have massively simplified the process of integrating, and we now support something like 50 post-trade systems as standard builds. We also went from having a single FX type model to having a multi-asset model. And again, we did this because when you actually look at trading relationships, it's not about a single asset. What you have is credit between a dealer and its client is available across a whole range of instruments. And once the client realizes they don't have to input tickets, actually more than one thing happens. Firstly, they actually do trade more with the venue that is giving them the luxury of not having to re-enter the tickets. But secondly, other departments say, well, I would like to do the same thing. So we now have what I believe is the most advanced multi-asset post-trade messaging facility. And certainly, given the awards that we've won and the testimonials we receive from our clients, we seem to have something which can be integrated extraordinarily easily. So we now have a fantastic economy of scale. And really, no bank themselves can have enough experience sufficiently quickly to be able to compete with what we do. In order to be able to have 50 back office system interfaces, you've got to have integrated to 50 back office systems. You can't do it if you've only integrated 10. So we are extraordinarily efficient at being able to get messages delivered. We're very efficient at being able to get the integration done in the first place. And by reducing the work that the client has to do in getting the STP set up, what we actually do is make ourselves the most attractive venue globally for people to use in order to get this type of service.